Your time is 2 p.m. You're watching the weekly broadcast of Market View ERS Text Talk right here on Eswatini TV, brought to you by the Eswatini Revenue Service. I am Natlesi Tole and welcome to the program. In today's edition of Market View ERS Text Talk, we'll learn more about payee return submission and payment. You may know that Pay As You Earn plays a critical role in the country's revenue collection system, ensuring that tax deducted from employee salaries is properly declared and remitted to the Eswatini Revenue Service on time. In conversation with the ERS, we want to help employers better understand their responsibilities and the importance of using tax ease correctly. We will also share practical tips to help employers avoid common errors, especially when completing employee details, which are essential for a successful submission. But first, our business news. In our business news this afternoon, inflation is projected to rise to 3.3% this year, driven largely by ongoing geopolitical tensions, pushing fuel and oil prices higher, which will in turn feed into rising food prices and the overall cost of living. Inflation is expected to increase further to 3.48% next year, before easing to 3.23% by 2028. These projections were shared by the Governor, Dr. Filimnisi, during the delivery of his annual monetary statement address at the Central Bank complex in Eswatini.
Eswatini's inflation outlook is expected to trend upwards in the near term as underlying pressures begin to emerge. Global oil prices, driven by geopolitical tensions in the Middle East, are expected to push fuel costs higher, directly impacting transport inflation and feeding into food prices. Exchange rate movements also remain a key risk to domestic inflation. In March 2026, domestic inflation was forecasted at 3.1% for the second quarter of 2026, rising to 4% in the third quarter and 4.2% in the third quarter and 4.2% in the fourth quarter. On an annual basis, inflation is forecasted to average 3.3% in 2026. In 2025, credit extended to the private sector continued to strengthen, underpinned by positive economic growth and the accommodative monetary policy stance. On a year-on-year basis, private sector credit grew by an average of 9.4% to 22.4 billion in 2025, up from an average of 8.4% in 2024. This growth was mainly driven by increased lending to the business sector, which rose by 15.5% from 10.6 billion in 2024 to 11.9 billion in 2025, compared to a growth of 11.5% in 2024. Credit to the household sector has also expanded, recording an average growth of 3.4% in 2025, although this was lower than the average growth of 5.4% in 2024. In nominal terms, credit by the household sector grew by over 700 million from 8.7 billion in 2024 to 9.4 billion in 2025. In the first 3 months of 2026, private sector growth moderated, registering a year-on-year rise of 8.1% to 23.2 billion at the end of March 2026. Honorable Minister, may I say that about 3 years ago, our credit extended to the private sector was around 15 billion. So this has been a phenomenal growth in the banking sector. This increase continued to be driven by the business sector, which maintained double-digit year-on-year growth of 10.1%, Credit to the household sector also improved by 7.1% year-on-year in March 2026, indicating a recovery in demand for household credit. In the short term to medium term, private sector credit growth is expected to strengthen, supported by sustained economic growth and improving financial conditions for both households and businesses. However, rising inflationary pressures associated with the conflict in the Middle East are likely to dampen credit growth in line with the uncertain global economic outlook.
During his annual monetary policy address, the governor also touched on the country's total public debt, stating that as of March this year, it stood at 41 billion emalangeni, representing 42.7% of the gross domestic product, reflecting an annual increase of 13.3%.
As of March 2026, total public debt stood at 41 billion, representing 42.7% of GDP, reflecting an annual increase of 13.3%. This growth was driven by increases in both domestic and external debt, which rose by 7.5% and 20.3% respectively. The domestic monetary policy outlook remains highly uncertain, shaped by heightened global instability arising from the Middle East war and trade tariffs. The fluid geopolitical environment continues to exert upward pressure on energy prices, while disruptions to farm input supplies, notably fertilizer, risk amplifying food inflation. As a result of these geopolitical developments, the future path of banks' policy rate will remain data-driven, meaning that it will be determined by developments in the global sphere and the impact on the domestic economy. Over the short to medium term, the bank will continue its mandate of ensuring low and stable inflation while supporting sustainable growth in the face of evolving global, regional, and domestic conditions. Protecting the currency peg to the rand remains our price stability anchor. The domestic banking sector continues to demonstrate good growth, strong health, supported by adequate capital reserves, though these declined slightly compared to the previous year. The capital adequacy ratio declined to 15% by end of March 2026. However, the ratio remained comfortably above the regulatory minimum of 8%. The Eswatini banking sector's total asset increased by 16.6%, rising from 31.4 billion in March 2025 to 36.6 billion in March 2026. I will now turn to development finance issues. Small-scale enterprise loan guarantee scheme continue to provide guarantee support to eligible borrowers through various participating financial institutions. In contrast, the export credit guarantee scheme was not active during the period, with no new guarantees issued or transactions undertaken under the scheme. The bank recognizes the potential for the export credit guarantee scheme to drive export-led growth and is thus working on an initiative to revive this scheme. Since its establishment, the small-scale credit scheme has supported the issuance of a total of 2,008 guaranteed loans provided through commercial banks and eligible non-bank financial institutions up to March 2026. During the year to March 2026, this scheme issued a total of 106 new guarantees with a combined value of 33.6 million. These guarantees supported loans amounting to 38.8 million extended by various participating commercial banks and eligible non-financial institutions. By March 2026, bank notes issued rose to 7.3 billion from 6.6 billion the previous year, while coins increased to 58 million from 53 million. Deposits stood at 7.2 billion in banknotes and 49 million in coins. Overall, currency in circulation reached 1.561 billion, marking a 5% increase from the previous year.
And that is your business and fiscal update. After the break, we speak to the Eswatini Revenue Service. Stick around.
Those that
are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. You're still watching Market View ERS Text Talk, and today's topic is a very important reminder to all employers: payee return submission and payments. To guide us through this conversation, my guests today are Nduduzo Dlamini, ERS Marketing Communications Manager, and Tulile Simelana, ERS Senior Taxpayer Education and Information Officer. Good afternoon to you both. Tulile, allow me to begin with you. Who exactly is required to submit and pay the pay-as-you-earn?
Thank you, Notile. Good afternoon to you and to our viewers. It's a pleasure being on the show again. Yes, since pay-as-you-earn is tax deducted from employees' remuneration and employers are responsible, so all employers are required to submit PAYE returns monthly and remit the pay-as-you-earn deducted from the employee's remuneration. Mm-hmm. Yes, all employers, regardless of the size of the organization or business, they're all required to comply with that.
Yeah. Nduduzo, coming to you, where are pay-as-you-earn returns really submitted?
Good afternoon to you, Notsel, and the viewers. So at ERS, we've tried to make everything digital. We've got a platform we call Tax Easy. So that's the platform where employers need to submit their PAYE. This platform, they can get it on our website, just visiting www.ers.org.sz, and then they navigate to Tax Ease, then they should be able to get it there. Or they can also download our ERS TaxPal app on all Play stores. So once you've downloaded it, once again you'll be able to access Tax Easy there, and you upload there digitally. But for those, we do know that some of our clients, they might not have a laptop or a cell phone. We also will welcome them to come to our service center stations, where we do have kiosk. So which means that they will need to bring their flash drive and documents so that they can log in, and then they will be able to upload them.
Flash drive and documents is such a long process, but I appreciate the service's efficiency in terms of having or compliance being made easier, that is digitally. Yeah. Tulile, what must employers submit on the Tax Ease platform?
Thank you. As I said, that they're expected to file a pay-as-you-earn return monthly, which is in a form of a schedule known as a pay-as-you-earn schedule or PAYE schedule, which is an Excel spreadsheet that is downloadable from the Tax Ease platform. So clients or employers are expected to complete the necessary information, which includes full details of an employee, which is the employee name and surname, the employee's personal identification number, the employee's earning details, including their basic pay, the amount of any benefits received in that month, and also deductions such as ENPF, employee contribution, pension fund contribution if it's applicable, and provident fund contribution, and also the amount of pay as you earn deducted in that month. It's very important that they give us the full details, and it's also important that the employee's PIN is correctly captured, because the system also is capable of validating that information upon submission. So it's very crucial that they make sure that it is correctly captured. So we also expect employers to include all employees had in that month, regardless of the amount of salary they earn, and also board members. If they have any board members, they should be included in that schedule.
Tulile, you emphasize on the correct input of data.
Yeah.
Mistakes happen. Just say, what if maybe I do get my employee's PIN wrong? Just say I get it wrong. Is there any way that I can come in and get that rectified?
Okay, thank you. It's easy to rectify that because the system will flag that when you try to upload the schedule. Okay. So it will flag that there's a PIN that is not correct. So that is when you know that you need to correct that information. But maybe other details that are not validated in the event, maybe an employer realizes after submission that the information was wrong, it needs to be corrected. They can always do that through informing us. We have some steps where we require them to submit an amended schedule with the correct information.
Right, fair enough. Thank you, Tulile Nduduzo. The schedule has been filled in. The information is already on the platform. What's next?
It's quite simple and easy, as we've made it digital. So once they upload the schedule on the TaxEasy portal, what it will do, it will summarize for them the total employees, the total pay deducted, and the total remuneration which is being submitted. So what we urge the employer to do is to just check and verify that that information is correct before they submit. So to just upload on the portal, you verify, and then you submit. Tulile earlier talked about that the system will then pick up if there are any errors on the ID, it will flag it for you, then you should be able to correct that before you submit.
Okay. Tulile, verification before submission. What about payment?
Thank you. Yes, payment is also important. We also require employers to remit the total pay as you earn deducted monthly. We have a various number of platforms that they can use for making payments, such as EFT, such as Momo Pay, which they can use when coming to our service centers if they prefer. We have Momo Pay and the POS where they can swipe. But for those maybe who may have cash and want to deposit cash, they can only do that directly to the banks, and our bank accounts are available on the website and on our TaxPal app. So those are the platforms that are available for payments. What's also important is that they should correctly reference payments so that we correctly allocate. What we need for referencing is that they should give us the employer's team with the code IT, then the year and month for which the payment is made. For example, now today's the 7th of May. We're expecting employers to make payments for the April pay-as-you-earn deductions. So the reference they're expected to use is their TIN, which is a 9-digit code, IT, then 2026, then APR for April. So that's the correct referencing.
Fair enough. Thank you very much, Tulile, for that one. So let's talk deadlines. When are employers expected to submit and pay?
So the deadline for submitting pay-as-you-earn is the 7th of each month. So if I could give an example, let's say you pay your salaries to your employees by the 25th. It means you've got from the 25th to the 7th for you to submit the schedule and make payment. But we do know that the Commissioner General has given a grace period up to the 14th of each month, which means by the 14th everyone should have submitted and made payment by the 14th, but the legal date is the 7th.
Right. I like the grace period, but also things happen, you know, and often we're not able to meet deadlines right on time. Tulile, what really happens when an employer submits late? I know this is discouraged, but here's an instance where I might have to submit late. What happens then?
Okay, there's a penalty. As we said, that we expect the employer to submit a return and make payment. So if the payment is made late after the deadline, there is a penalty, which is 20% of the amount that was supposed to be paid by the 14th. And also for late submission of the return, there's also a penalty, which is 200 malangeni per day. So if one delays by 5 days, then it will be 1,200 per day is charged on that. And that's why we're encouraging employers to make sure that they submit early.
200 malangeni, bit steep, but fair, you could say, given that there is a 14-day grace period. Did you wrap it up for us? Any reminder to employers?
Yeah, just to mention that we have tried to make everything digital. We do urge employers to always check and verify before they submit their pay-as-you-earn. And then secondly, all of this information is available on our website at www.ers.org.sz. Should you require any extra information, they can also email us at info@ers.org.sz, or they can WhatsApp us at 7606-3735. We are willing to assist them.
The service is willing to assist you, lady and gent. Thank you very much for your time. That was Nduduzo Dlamini, ERS Manager, Marketing and Communications, and Tuliles Milane, ERS Senior Taxpayer Education and Information Officer. We're discussing all things payee, return submission, and payment. Remember, everything is online through the TaxEase platform. This is Market View ERS Tax Talk. The show continues after this.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.sz. For more information, visit www.esccom.org.sz.
Welcome back for the final leg of the show. We are virtually joined by in-house economist and Sibia for the latest insights when we're talking all things markets. Mr. Sibia, good afternoon. Glad to see you. So we are now betting on at least a possible US-Iran deal and the reopening of the Strait of Hormuz. How are markets maybe reacting to this optimism?
Good afternoon, Notsile, and good afternoon to the viewer as well. So what we're seeing is exactly an optimism that is driven by news around the Strait of Hormuz. So we're seeing that happening in both the US markets and the Asian markets. But we're seeing some divergence in the in the European markets, while South Africa is also receiving those news in positive light, and Brent crude has actually crossed below the $100 per barrel mark. So overall, right now, if we go into the market segment by segment, starting in the US, we can see that the Dow Jones Industrial Average has actually gained 612 points in today's trade, and it's back on that 49,000 mark because of those news around a potential deal between the US and Iran. It seems like these two parties are getting closer to a deal, where we're looking at just a one-page document that's also even going to lay out future direction of the nuclear deal with Iran. And then the Nasdaq Composite Index up 512 points, showing that the tech space is also taking the news in great strides, and the S&P 500 back above the 7,000 mark, and we're seeing that the news are being received very well. But the industrials have actually gained quite a lot because we've also seen in the price of Brent crude oil there's that downward movement below the $100 mark. And then coming into London and the greater Eurozone, what we're seeing is the FTSE 100 down 67 points, and the DAX down 16 points, and we're also seeing the same within Paris. So now that is largely driven by the fact that we know that Europe is really on edge around the energy issues there, and that means Europe continuously looks at Europe would rather be receiving a full-on deal than looking at what the news that are coming out of Iran. And then also, if I think Europe has also come to understand issues around President Trump in terms of whether or not a deal is about to be struck. We know President Trump has a way of just turning around, and just changing things. And then also we're seeing the lackluster performance of the metals affecting the European markets there. And then in Japan, we're seeing, the Nikkei gaining 3,020 points after that very, very long weekend in Japan there, and it's actually reaching an all-time high for the first time that the Nikkei has actually crossed the 62,000 mark ever since it was being tracked. So now that's on the backdrop of that optimism around the peace deal. With Hang Seng there, Hong Kong gaining 412 points, because optimism around the peace deal and the good performance of the tech stocks. Shanghai Composite Index back on that 4,180 mark. Remember, before the war, the Shanghai Composite Index was at 4,300. So we're seeing the optimism coming back into the market. South Africa there, joining the rest of the world, with an optimistic drive back on that 119,360 mark, and that is a number we last saw before the war. Remember, before the war, South Africa was actually at 120-something range. So we can see the sensitivity of South African investors to the prices and movements in terms of Brent crude oil. In Eswatini, the Eswatini Stock Exchange has not shown any signs of movements. And then moving on into commodities, gold is actually up 51.5 points, which also supports movements within the Johannesburg Stock Exchange. And the price of Brent crude oil is actually right now below the the 100 mark, and now we're seeing, just a bit of revertance to back to gold in the markets, because now if a deal is strike, the chances of an interest rate hike becomes lower and lower, and then gold becomes the best hedging item. And then when you look at currencies, because of those positive news, the lilangeni against the dollar is back on that 1630 mark, edging closer to the lower 16s and to the higher 15s. Against the euro, we are on 19.18, and against the Japanese yen, we are at 9.59 in terms of one lilangeni equaling 9.59 Japanese yen. Thank you, Notsile.
Thank you very much, Mr. Spear. That was economist Sanele Sibia coming through with market insights. This has been Market View ERS Text Talk. Thank you so much for staying with us. Until the next edition, take care.